the market is a lot more dangerous, now, right? And this is, as you know, this is the first time I'm saying that for 2 years, right? The risk reward is definitely skewed. I don't know that that means it's going to be a recession, but it means that that is now the surprise.
Jason Shapiro is back. He's a founder of the Credit Market Report. He'll be giving us his outlook for 2025 for stocks, bonds, everything in between, and opportunities for investors. Jason, you've had a great track record on my show this year, calling the bull market of 2024. Welcome back.
Thanks for having me, David.
Thanks for being back, Jason. Before we get your outlook, can you just evaluate what happened this year for the markets? Anything that surprised you at all with any market movements that you may or may not have called?
I mean, they all surprise me, David. What doesn't surprise me anymore, But no, I think the market's acted pretty rationally this year based on how I see things.
You think 6,000 at the S&P 500 is a bit crowded on the upside?
I do.
Okay. How are
I
you
do.
playing that?
I mean, I would say it like this. In general, what you want to try and do is buy assets that when people don't want to own them, right? And if we want to argue that that time was actually when we spoke for the very first time, which was late 22, early 23, when everybody was calling for a recession and they didn't want to own stocks and they thought it was so bad, that's when you want to own stuff. I would say that now, since the election, that has flipped the other way. Now everybody wants to own stuff. There's a scramble to own stuff here. Doesn't necessarily mean that it's the high. But if you're buying from them when they don't want to own anything, then you want to sell to them when they all want to own it. So this is where I think that we're at, right? So that's how I feel about it right here. Doesn't mean the market can't go higher, but it means that from a risk reward point of view, I don't think that right here along the stock market is a great risk reward anymore.
Well, maybe start by telling us how you're positioned currently into the new year. So we'll start with stock markets for now.
I have no position in the stock market right now.
What do you have positions in?
Energy. I'm long natural gas. I've been long natural gas for probably a month or so here, 6 weeks, 6, 7 weeks maybe.
hmm
That's my major trade right here is long energy and in particular natural gas.
Well, natural gas has, I'm looking at my screen here. If you take a look at my screen, I mean, it's a great chart. It's had a big run up from September
Yeah,
into the end of the year. And you're still long. You think there's still upside? This isn't credit for you?
it
I
is
guess if
not.
you zoom out, it's like nowhere near its 2023 top. So,
No, it's not crowded. They were hugely short when I got long a couple months ago, and now they are still short. They're not as short as they were,
yeah.
but they are still short. So there's a potential here if we can break through some of these technical levels, which we may be doing today. There's a potential that we can get a nice squeeze, get these shorts nice and squeezed here, which would be nice. Doesn't guarantee it's going to happen, but so far the trade's worked, and I'm just riding it till she bucks me, David.
How how do you make the evaluation that something is crowded? Because if you take a look at my screen here, it's up about 93% since its lows in September. By any means, it's done very, very well. If a stock were to go up 94%, we may make the judgment call that it's a little bit overbought, but I'll let you make that call. What do you look at to determine whether or not something is crowded? Certainly, it's not just a percentage move, right?
It has nothing to do with price at all.
Okay.
I look at positioning. So I look at the commitments of traders data, which shows me the positioning in the futures market. And as long as it says that they are short, then I'm happy to stay long. And when they stop being short, then I will get out.
If you take a look at we talked about the S&P. What about small caps? What's the positioning right now on the Russell? Have you looked at that? Big downward move since the end of November.
It's pretty neutral. I mean, they started getting very long the Russell right after the election. The election was seen as
hmm
Russell was seen as the biggest beneficiary to that, which you can see it was the biggest mover after the election to the
Yeah.
upside.
Yeah.
And that now is a problem because we are now lower than that. Everybody who bought the Russell since the election is losing money now. So they're trapped. They're trapped long at that point. So that I don't think that's a very good thing. mixed with the fact that I see a lot of these sentiment indicators and a lot of the stuff on the commitments of traders data, and a lot of the data that shows how much money has moved into the markets in the last 2 months, is at record highs. I just think that we've just gotten to a point of a little too much euphoria. It started getting too easy. When it starts getting real easy,
Yeah.
that's when it starts to become hard most of the time.
Well, if you take a look at some of the big tech stocks, rough week for all stocks, but especially the Mag 7. If you just take a look at the the Nasdaq Composite, for example, on Wednesday after the FOMC made an announcement to cut rates by 25 basis points, and Powell was a little more reluctant to cut rates further next year. Markets didn't like that messaging, and they, had a big sell-off. What's the positioning right now, 2 days after that sell-off? Are people covering their shorts now? Are we on track for a rebound, you think?
I mean, clearly today people are covering the shorts. I
Yeah.
mean, my thought process going in, and I did a video on the Tuesday before the FOMC. My thought process going into that was that, first of all, people were way too long Nasdaq, and Nasdaq is the market leader. So I thought that if he were to come out and say something a little more hawkish than expected, that people were going to sell that. But I didn't think that you were going to be rewarded for selling right away, like that, selling that news right away. I figured what I said in the video was I figured that it would go down first and it would either rebound by the end of the day or the next day it would rebound. Neither one of those things happened. It clearly didn't rebound by the end of the day. And it didn't really, it tried to rebound yesterday, the day after, but failed. But now today, it clearly has had that rebound. So I was a day late, dollar short on that idea. Doesn't matter. I don't trade it like that anyway. But I still think that people are way too long. I think the
It's
upside.
almost like, sorry, I don't mean to cut you off. Keep going.
I was just saying, I don't think the risk reward for being long here is great. Can we have squeezes? I mean, the thing about, well, I could be wrong. The market can keep going up. It can always do that, right? Trend is always kind of over time up in the stock market anyway. Um, but even if right, you know, the thing about down markets, is they have massive squeezes all the time. This is why shorting is such a hard thing to do, and um, because even if you get it right, you have massive squeezes. It's so easy to squeeze the market higher. So, um, shorting is a tough thing, but I
Mhm.
think that long here is not great risk reward here. I would not be suggesting to people that they should be aggressively long stocks here.
Yeah, I mean that's a
And
complete
that's not to say I think the bull market's over, right?
right.
Or anything like that. I just think that we got to have a time here where things need to just settle down a little
This
bit.
is 180 from exactly what you told me a year ago. So we should probably listen up if you kind of I wouldn't say change your outlook per se, but just, kind of a little more cautious now than a year ago. But generally speaking, I mean, we're living in a time where it looks like FOMC meetings are like earnings releases, Jason. I mean, how do you play big events like that? Do you position yourself ahead of the event? Do you hedge both ways to see how it goes? I mean, nobody knows exactly
I
what
don't.
they're.
I'm happy to sit and wait. I don't play anything that I think. I play what the market tells me to do. So that was bad news. The market went down. There's nothing special there, right?
Yeah.
I think, for example, I don't think it's going to happen, but if the market were to close down today, after a lower PCE number,
Hmm.
um, that would be telling me something, right? If the market were to close down today, which seems a pretty far cry right now, midway through the day, but if
Yeah.
it were, then I think that would be really, really telling and really, really bad given how long everybody was into this and how much I think they have now tried to buy the dip into it. I've been saying really since the start of the bull market in late 22 that um, the danger would come. It was like all these people were bearish, bearish, bearish,
Yeah.
and they didn't want to chase it higher. They didn't want to chase it higher. They didn't want to chase it higher. So the danger to me will come if and when we get a dip, 5-10% dip or something, and they buy into that, right?
Hmm.
They buy the dip. They finally see is okay. I can finally get long here. because there's so much money that's already gone to work. And if they buy the dip, then that's probably going to be the rest of the money out there that can go to work. And then there's nothing left, you know? And that will be a problem. I don't know to what extent they've bought the dip here. I would want a few weeks to see just how much of a dip we can get and how much they bought into it. But if they continue to buy this dip, that will be the danger because all the dips that happened in the last 2 years, they haven't bought. They've sold because they were also bearish. And as soon as the market started going down, they started shorting it. And then they just got squeezed again. And that could happen again here for all I know, you know? But what I'm watching for is them to actually, for the first time during this bull run, to actually buy the dip. And that to me will be a big danger sign because they're already too long here and they will get even longer and it will just be extended and the risk reward will be even worse than it is now.
Is that why you're not positioned in the stock market right now because the risk reward is just not favorable? Is that the
That,
primary reason?
that's correct. The risk reward, as I view it and as I measure it, is not favorable to be long the stock market here.
And it's not bad enough to short it. It's just you're just kind of waiting for things to break out upside or downside to make a decision for the next step.
Correct.
If you take a look at the Dow Jones right here, Dow Jones Industrial Average, I have it on my screen. I have to ask you about that. It's had a great run all year round, up until basically the middle of, well, the start of December. And then it's had this long streak of losing days. It's the longest streak of losing days since 1978. I think it's 10 consecutive down days if you count the FOMC meeting on Wednesday. What is that telling you? Does that mean anything to you? When something is, it's not the case for the S&P, by the way, but the Dow Jones, when it's down this many days in a row, does that mean something?
Not in and of itself, that's not really the things that I look at, the things I trade off of. So not in and of itself. I mean, it's pretty. I think people came into December thinking that the Santa rally was a gift, was a guarantee.
Hmm.
And when people come into things thinking that there's a guarantee, that makes the risk reward very bad in my eyes.
Yeah.
And and as it turns out, December, which is not over yet, but it's been a pretty bad month. It was not a bad month for the Nasdaq, but we saw the breadth numbers are so bad that I would be willing to bet that the average stock is down on the month, right? And I think that was all just a question of everyone saw it as such a gift. There was just no way to lose on the Christmas rally trade that they piled into it and they got a little bit smoked on it.
Hmm. Well, tell us about 2025 then looking ahead. Tell us some of the biggest trading themes you're looking out for, positioning or otherwise, some asset classes you're following, volatility plays you're following.
So I'm not very great at doing 1 year, going out one full year, because data changes, psychology changes as things move. But in general, if I had to twist my arm and say pick something to invest in next year, it would be energy. I think that's probably the best risk reward trade going into the new year would be energy.
Okay. Well, yeah, we've talked about energy. How do you feel about Bitcoin at it peaked at 108, 107,000. Right now it's down below 100,000. Positioning on Bitcoin, what's the sentiment here?
I would say that short term people own a little bit too much Bitcoin, but longer term people don't own enough Bitcoin.
Okay.
So the fact that
So it
it's
really
it's
depends on your time horizon then.
yeah, I think the fact that it's selling off here is a function of people got a little bit too crazy with this stuff recently. So it sells off a little bit. There's no reason why all these markets can't just kind of fart around for a couple months. Like everyone always thinks it's either got to be this huge bull market or it's got to be a crash. It doesn't have to be that. We saw Bitcoin do nothing for
Yeah.
6 months, 6, 7 months this year. And then it took off, right? Once everybody kind of gave up on it, then it took off, right? We got a little positive catalyst and it took off. And we were showing that the positioning was way too short once we got into sort of the fall. And then all you need is a little catalyst like the election, and things can take off because people are way too short and they chase and they get squeezed. So from here, again, it seems to be, if I were to guess, I would say people got a little bit too long, um, short term. But longer term, I think that the world is underinvested in Bitcoin on a longer term basis. If if Bitcoin is, and I'm no Bitcoin expert, and I know people get very emotional about this stuff, but if Bitcoin is a real phenomenon, then people are way underinvested for the longer term. But as a trader, shorter term, I think they've gotten a little ahead of themselves.
When you say a little ahead of themselves, is it primarily based on just positioning, or do you know?
Yeah, based on positioning.
Okay. What about sentiment around cryptos overall? Because I bring this up, and it's interesting because if you were to look at some several gauges for this, right? Google Trends, for example, if you look up interest for the word Bitcoin or crypto, you may see that right now, currently, we do not have the same interest as 2021. And that's interesting because the price has soared way past 2021. Take a look at my screen now. I'm going to show you Bitcoin interest over the past 5 years. All right. You can see that we have this huge interest from the general public in the last bull cycle. Not so much this time, even though the price went up. Is this a bullish indicator for you now that we don't have as many people piling in or interested in this theme as maybe 3, 4 years ago, despite the price going up?
Yeah, I mean, I think the fact that people of my age and boomers and all that, I talk to people, my friends, my brother, whoever, they are never going to buy Bitcoin. They don't
Okay.
understand it, is what they say. You know what I mean? They don't understand it. They're not going to get into it, blah, 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 blah. And I think that's a bullish thing, quite frankly. And that's what I say longer term, people are underinvested in the thing. But then you have shorter term, my son, who's 27 years old, emptied his bank account and was buying, crypto coins in the last few months, right?
Yeah.
And God bless me, made some money, at least to this point. He's made some good money on it. So that's why I say shorter term, I think that there's a little bit too much excitement. But longer term, I don't think that there is enough excitement because you have a bunch of people who just will refuse to own any Bitcoin because they don't get it. And we say that all the time when there are big technological changes. The older generation doesn't get it and doesn't participate in it.
Do you ever follow online forums like Reddit, 4chan, whatever the case may be, Twitter, to see what people are talking about when it comes to like cryptos and meme coins, or even like the next hot stock, Wall Street bets blew up a couple of years ago for this reason. People were talking about it and, front running markets and whatnot. Do you look at stuff like that?
I mean, I'm on Twitter. I don't
Yeah.
really, I'm not going to say I'm on Wall Street bets and all that, but on my Discord channel, we have a lot of people that get involved with that stuff, and they forward that information along as they see it. So,
Well, how
in
do you
that,
feel about using the community as an indicator? I mean, by the time the information reaches you, do you act on it? Is it too late?
using my community as an indicator.
Any community, but like, let's say Discord, for example.
Yeah, so I mean, like my community on Discord tends to work together for the most part to try to find where contrarian trades are. So, we're approaching it from that point of view because that's how we like to look at stuff. So if someone's posting something on our Discord saying, "Hey, everybody on Wall Street Bets is doing this or doing that," it's with the intention of highlighting to people that it might be time to be contrarian, this type of thing. And I think that that's valuable um, because I think, as I've said many times, the vast majority of traders will over time, not every time, but will over time lose money. So if you can figure out what the vast majority of traders are doing and you can fade them, then you can probably have a better shot at making money.
Take a look at my screen here for the DXY. Let's talk about the dollar. Again, huge run up since the election. I think since last we talked as well. And it just doesn't seem to stop. A little bit of a pullback here on the day. What's the positioning here?
It's getting a little crowded. It hasn't gotten max crowded yet. It is maybe sort of getting very close in the Canadian dollar and the New Zealand dollar. I think that shorting the dollar is going to be one of the great trades next year.
Mm.
I, I haven't done it to this point. I need some sort of market confirmation to do it. I need it to be a little bit more crowded to do it. But I do think that shorting the dollar will be a great trade next year at some point.
And I know you don't look at levels. It just really depends on positioning. But so you're saying you could be shorting it at 109, 108. It really doesn't matter.
It really doesn't matter to me now.
Any particular events that would trigger a mass explosion of interest in the dollar again. I know tariffs have been bearish for other currencies. For example, the 10-year yield has just been going up. That's probably helped on a rate differential basis. The other currencies haven't done as well. So, any macro events you think that could push the dollar around?
Yeah, you said it. It's the rate differential expectations that this is happening, right?
Yeah.
The U.S. is slowing down, if not stopping, on lowering rates, whereas these other countries are continuing to lower rates.
Hmm.
So the rate differential expectation is large. The euro is hated. So what will happen, obviously, is the market will move first, you know, and then after the market starts to move the other way, we'll find out why that was, and it will be because either the U.S. again starts to lower rates, or the euro people lower rates less than expected, and that will be the event that will have the big move. But the market, I promise you, will move first. It always does, right? The dollar's not gonna top on one of these news events. It will
Yeah.
top way before one of these news events, and then the news events will happen, and then that will push the new trend the other way.
Right.
You look at how hated the dollar was as recently as October this year. It was absolutely hated, right? And now it's loved, right? We were buying dollars, shorting currencies really back during that period. Um, we were shorting Aussie and things like that.
Yeah.
Um,
You
and
brought
now
up some of the other currencies. I wonder, like Canadian CAD, for example, right? If you take a look at CAD USD, is it at a point where we could start to buy it? I mean, it's been hated for, ever since the election, even before, it's just been going down. I mean, at
I
what point?
certainly, I certainly wouldn't be short the Canadian dollar anymore here.
Yeah.
As to when to buy it, you know, that's a different question. But I will buy it when A, it gets maximum crowded short,
Hmm.
B, when the market can no longer go down on bad Canadian economic news.
Right.
As it is to this point, bad Canadian economic news has continued to make it go down. But when that can no longer make it go down, then that's when I would be interested in actually getting long the Canadian dollar.
Okay. How do you
I,
usually
I could
sorry, yeah.
miss the trade. I could miss the trade, by the way. I miss trades all the time, right? But I would say being short the Canadian dollar here is not a great risk reward trade. Doesn't mean the Canadian dollar can't keep going down.
Yeah.
I hope it does keep going down because it will give me a better opportunity to buy it. But I don't think that that's a great risk reward trade here.
I know you look at positioning and sentiment mostly as a trader, but can you just evaluate the use of certain technical tools that other people look at, like trend lines, for example, trend lines and support levels, and for example, let's just take the cat chart I have right now. If you take a look at this, the previous low was around 2020. Some people might draw that line and say, look, that's the support because that's the low from the last cycle. I mean, does that make sense to you? Is there any like logic to that kind of intuition?
I personally think it's trash.
Okay,
I watch people that do this stuff, and it makes me laugh every single time because they just redraw the trend lines later, right? And if you take the charts, if you honestly take the charts that they show,
okay,
and they're showing their trend line as of today, right? If you took the last month off of that chart, there would have been a completely different trend line that they would have been drawing, right?
fine.
It's all after the fact stuff, right? I think that trend lines and technical analysis, I think it can be very helpful from a risk management point of view, right? If you want to buy the Canadian dollar here, and you're saying that that's a double bottom on that trend line,
Yeah.
fine, then buy the Canadian dollar. But if it goes back through that trend line to the downside, well, then you have to get out of that long. And that can be a good risk management tool. If that's what helps you with your risk management, then I think it's terrific. As far as being a predictor, I think it's complete garbage.
And then I will remove this trend line then because you think it's complete
I think
garbage.
it's complete garbage. And I think that the work that people do on it, I watch these people all the
Yeah.
time. I think that I think they are complete garbage because I think that they're dishonest about it. Because they just redraw the trend line all the time. Say, "Oh, look, I told you that this thing got you right at the exact high.
Okay,
Sorry.
so all
No,
right, trend.
that's the issue. People love to point in retrospect, like, oh, here, I told you this trend line was where it was, and that's exactly where the top was. Okay, but after the fact, you told me that you were drawing trend lines before this, that you were saying the same thing that wasn't true. And then one time it happens, like, okay, there it was. All right, because you're drawing the trend line in retrospect. And I think it's garbage. And it actually frustrates me very much when people do that and try and fool people into thinking that what they're doing has any value when truthfully it doesn't. But I think that it could have great value, like I say, from a risk management point of view. If that helps you with your risk management, if that helps you cut losses, then I
No.
think it, then I think it's wonderful.
Tell us about your risk management philosophy. Do you stop losses? Do you have targets? Like, what do you do?
Yeah, I mean, I have a very specific process that I use. Um, I'm picking market turns. So if I pick a market turn, let's say I'm buying something because I think it hit a low. If it makes a new low, well, then I didn't pick the market turn and the trade is wrong. So I stop out. It's pretty simple, right? All trading, I'm not talking about investing here. All trading should have that type of philosophy. It has to have that type of philosophy. I don't care what you use. You can use trend lines, you can use technical analysis, you can use whatever you want um, to get into a trade, but you have to have a define. Here's why I got in, and here's where that idea is wrong. So if that idea is wrong, then I'm going to cut my loss. That's it. And that's where I think technical analysis can help. It can help with your risk management. You need to define when your idea is wrong because you are going to be wrong, right? No one's right all the time. Nothing's right all the time. I promise you. So, and this being wrong thing and not admitting to it and not cutting loss can and will kill you over time. So, whatever it takes for you to define where your trade is wrong and therefore stop out of that idea is valuable.
Well, give us. We talked about the stock markets. We talked about energy and Bitcoin, a bunch of other things. But give us one trade that you think is on the verge of turning, if there is something that you're following right now. Maximum crowd
Energy,
energy is
energies,
okay.
and dollar.
That's
I
the
think
one.
dollar and energies are, I
Okay.
believe, going to be the two big trend turns next year.
Energy bullish and then dollar bearish. That's basically
Yes.
your, yeah. Okay. I'm just going to bring up some miscellaneous things for you to comment on. Coffee had a great run in the last couple of months for fundamental reasons. I mean, you look at a chart like that, what do you think? Do you thought you,
I think if you're short, you're dead.
yeah, okay.
There's been no signs of this stuff getting crowded at all.
Okay.
Cocoa's another one. There's been no signs of cocoa getting crowded at
Yeah,
all.
that's the other one. Yeah.
And that thing has gone ballistic. And there's been no signs of crowdedness. There was some signs of it being crowded way earlier in the year. And then it totally went away. And during this run up, um, people have not chased it, right? They're like 50% less long cocoa now than they were at the highs in April. So that move from April to November when it went down,
Hmm.
got a lot of the longs out. And as soon as they got out, look what happened. It started ripping up again. The fundamentals, obviously, in cocoa are very, very strong, right? We know
Hmm.
that. Um, those to me are not trends that you necessarily want to fade here, right?
Do you think
A non-crowded trend is the greatest kind of trend.
I need to bring up something a little more macro here and see if you've paid attention to this as a trader. Tariffs. We don't know to what extent tariffs will be implemented. We don't know to what extent Trump's tariffs threats are bluffs. It's just a big unknown. And, we know that the impact may not be zero, but we don't know to what extent it would impact the markets. How do you factor in something like this where you know it's coming, you just don't know to what extent it would impact trades?
There's your answer. So why even, I don't even think about it. When it comes, I'll think about it. You know what I mean? I'm not going to sit here and speculate. Oh, he's going to do tariffs and that's going to be inflationary. Therefore, I'm going to sell the stock market. I don't know if he's going to do tariffs. And even if he does, I don't know what they're going to look like.
But because somebody who doesn't know your process may listen to what you just said and be like, well, why aren't you positioned ahead of the fact? Why are you only reacting to things after the fact? How would you respond to that?
Because I need the market to tell me. I
Mm,
don't tell the market. I let the market tell me,
hmm.
right? Because the market is a discounting mechanism, right? So I don't play that game because that's the game that loses your money, right? I let the market tell me. I don't tell the market. I don't know what the tariffs are going to be, like you just said, right? So let them do them, and let's see what the reaction is, right? And let's see what the market is at the time. What if the market's already selling off in anticipation of the tariffs, and
Yeah.
then they happen, right? That's a different story than the market's being on all-time highs in anticipation of the tariffs, right? Those are two different stories. So, until something happens and until you see the reaction, I don't see how you can make a play on it. You can want to be right and want to be smart and want to be all these things, but unless you have some kind of working crystal ball, I don't know how that's going to work over time. And you'll get something right. Oh, I knew the tariffs were coming, and that's why blah 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 blah. But it's just like flipping a coin and having it hit heads and being, oh, I knew it was going to be heads. Well, no,
Yeah.
you didn't. You know.
Speaking of yields, I want to pull up the 10 year and ask you about the 10 years positioning. It's that's something that's been going up. Let me just pull that chart up here. That has been pretty much ripping higher ever since the election. Dollar DXY versus 10 year, pretty much perfect correlation if you overlay these two charts. So I don't know if it's the same story as the DXY that you just gave us, but tell us how you feel about the 10 year right now.
Um, Positioning wise, there's nothing there for me. I think fundamental wise, I think people misunderstand. I know I probably have spoken to you about this before. I think people misunderstand for some reason how the bond market and how, in particular, the yield curve works. The bond market topped and the yields bottomed the day that they cut rate 50 basis points. That day, right? You see it right on that chart in September, right?
Yeah.
Um, and that's to me, I had talked a lot about this going into it, but um, if you're cutting rates into an environment where there is a ton of liquidity out there already, that's not good for yields, right? That's bad for yields. And people are like, oh, they cut rates. Why are bonds going down? It's like, well, bonds are going down because they cut rates, you know, because we have plenty of liquidity. So if you're going to cut rates into that, that's going to be seen as A, inflationary, and B, good for growth, right? So if it's good for growth and it's inflationary, then that's bad for bonds, right?
Mm.
Um, and I think that's what bonds have done. So from here, I actually would have expected, and wrongly so, that when they stopped cutting rates the other day, that would have been very bullish the long end of the curve. Um, as it turns out, it wasn't. But and that's not a good thing either.
Yeah.
So I don't think that the bonds act very well. I don't even necessarily think that the bond market anymore is about inflation so much anymore.
Yeah.
I think it's a lot more about the debt and the deficit and all that stuff, right? And I think it can be while bonds they've gotten a little bit crazy, just like the stock market got a little bit crazy to the upside. The bond market's gotten a little bit crazy to the downside here. So I would not be surprised to see it have some sort of bounce here.
Hmm.
But net, I'm not interested to steal a line from Paul Tudor Jones. I am not interested in owning the long end of the yield curve right here.
All right, makes sense. Let's close off on just economic sentiment overall. How would you evaluate sentiment from the markets this year versus same time last year, end of year 2023? I'll just give you, what I've noticed watching other people's channels as well as interviewing people on my channel. There's been fewer people now calling for a recession in 2025 than there were people calling for recession 2024 a year ago. There's still a few holdouts. There's still there's actually some people who were bullish turned bearish. But on the whole, I think it's a bigger mix, and more people are bullish now. Has that something? Is that something you've noticed as well?
Oh, 100%. 100%. Everybody in 23 was calling for a recession, right? And now you've had a switch because now you've had a switch in the politics, right? In the fiscal situation. And you have like him or hate him, you have a group in there now who is clearly all about cutting taxes, cutting regulations, creating growth at any cost, and unleashing the animal that is the free market economy. So there's no question that there has been a switch there, you know, and so that's become discontinued. So it's that's why I say the market is a lot more dangerous, you know, now, right? And this is, as you know, this is the first time I'm saying that for 2 years, right? Um, I think it's become a lot. The risk reward is definitely skewed. I don't know that that means it's going to be a recession, but it means that that is now the surprise. The surprise before that was that there was going to be no recession, right? The surprise now, I think, is that there will be a recession. Um, doesn't mean it's going to happen, but the risk reward situation is not good based on that. You know, I think about this stuff a lot. You know, what's clearly driving this whole thing, as we know, are these large cap tech stocks, right? That's the driver behind everything now. And you know, you're talking about a group who is making more money than anyone ever made in the entire history of the world, right? I think I saw a thing that Elon Musk's net worth went up more in the last 5 weeks than Nelson Rockefeller's net worth was the day he died. And I'm talking about in today's dollars, right? Nelson Rockefeller was the richest man on the planet. Elon Musk has made more money than him in 6 weeks. Okay. So the amount of money that these people are making, and by the way, investing, is like nothing in the history of the world. And now, with the new administration, a lot of these people are being appointed to positions of power as well, right? So nobody can stop them at this point. To me, these guys are like a bunch of Bond villains, you know, living in a volcano, right? They've got tons of money. They are investing tons of money, and nothing can stop them because they have now gotten appointed to the government. So that's the bull side, right? How is that going to be stopped? Um, I don't know. The bear side is those are the kind of things that you hear at the top of a bubble, right? That nothing can be stopped and there's just no stopping it. And so therefore it's a one decision thing. You just buy it. And if it pulls back, you buy more, you know, and you buy the dip and you buy the dip. Those are the kind of things you do hear at the top. So it's a tough call here, but and that's why I say going out a year, it's a very tough call. I would, if I you twist my arm, I would expect that the market would be higher in a year, but
Yeah.
I expect that it will be lower first. And I think we need to work off some of the froth that has come in here.
Do you think valuations and crowded positionings are correlated at all? Is there a relationship? Something is high in valuation, it's high, it's also well, crowded and on the long side, or usually that's not the case. Doesn't always have to be the case.
Doesn't always have to be the case.
Okay.
Nvidia has theoretically been over, you know, had a huge valuation for a very long time, but we
Yeah.
never saw Nvidia getting crowded. In fact, what we saw was most people shorting Nvidia that whole way up, right?
Sure. Sure.
Um, so it depends on whether they buy into it or not, you know. Sometimes they buy into it, sometimes they don't, right? Um, Valuation, I think, is a funny thing because people are looking at historic valuations and comparing that to today, right? Oh, the PEs are very high compared to history. The price to sales are very high compared to history. Well, however you want to look at valuation, right? Very high compared to history. Um, but, you know, we're looking at probably the next 10, 15 years being the most uncertain 10, 15 years that we'd ever looked at before. Like, do we really know what the world's going to look like in 15 years from now? I don't think we have any idea because these people are investing so much money in technology that we don't understand for the most part. They probably don't even know what's going to look like in 15 years. Who knows what this stuff is going to turn into? The computing power clearly has reached that level of just taking off, right? What could that turn into? We just don't know. So if it turns into something great that is this huge productivity thing that they claim it can be, then I don't think that valuations are necessarily expensive here, right?
Yeah.
If it turns into complete bunch of bull, then clearly valuations are way too expensive here.
Right.
But you're going to have to be calling shit, and I'm not saying don't, but you're going to have to be calling bull on people who are not only investing an incredible amount of money into this stuff,
Hmm.
but are investing an incredible money into things that they are determining what the future is. They're not just betting like I am on what the future might be. They are helping to determine what the future might be. So they're having a say in it as well, right? So you're going to have to tell me that those people are completely clueless and full of shit and all that. And if that's what you believe, then by all means, you should be shorting all these tech stocks. Um, I wouldn't do it until they started to confirm what you are believing. But but otherwise, I don't know how you're going to tell me what valuations are. Unless you can tell me what earnings are going to be for the next 20 years, I don't know how you can tell me what valuations are. Valuing them on the last 10 years of earnings, or even last year's earnings, or even next year's earnings
Yeah.
is is not how it works. You know, you have to know what the next 10, 15 years of earnings are in order to value something correctly. And like I say, I think the possibilities for what earnings are going to look like in the next 10, 15 years for these type of companies is impossible to determine,
Yeah.
you know, because there's so much change and so much technological change driven change going on. So
Final
that's my
question.
that's my problem with valuations.
Yeah, all right, that makes sense. Well, final question before we go. So we've talked about the things that you think are going to turn dollar energy. We've talked about stocks and your positioning on bonds and whatnot. Is there an emerging sector or theme that is going to pop up in 25 that you will pay attention to a little bit more? Just follow a little bit more than maybe you didn't before. I'll give you an example. For example, quantum computers are popping up all over my news feed.
Sure.
There's talks of now quantum computing being able to break the Bitcoin code, for example. Anyway, that's not happened yet, but people are starting to pay attention to that sector a little bit more. Anything else on your radar?
Energy, David.
Energy.
Energy. Think about it. If you want to talk the fundamental story, whether these stocks are overvalued or not, right? You want to tell me Nvidia is overvalued, whatever's overvalued, that's fine. The stock may be overvalued. But like I've been saying, these people are still going to be investing huge amounts of money into this stuff, right?
Yeah,
We
yeah,
know they're not going to stop. They have tons of money. They continue to have tons of money coming in, right? Google, whoever, Facebook, they have tons of money coming in and they're investing it in this stuff. And then that leads to, and I haven't made this up, this has been out there, but you know, that leads to these data centers, which leads to the need for more energy, right? And that coming from a time, and people were talking about that 6 months ago, and they got burned on that trade because it got too crowded. It's no longer crowded, right? People now hate energy for the most part and are short energy, which is why I'm long natural. I could only be long natural gas if people were short it, right? So where does it lead to theoretically? It leads to nuclear, right? Which is what these guys are also investing in. They're investing in all these weird nuclear companies, right? These are flyers. If you want to take a flyer, you know, those are flyers, Oklo, OKLO, things like that. I don't know which nuclear technology is viable, which nuclear technology will get adopted. I have no idea, right? But there's a bunch of them you can bet on. But even if nuclear is going to work, it's going to take a decade at least before it's adopted. So you need something in the meantime. And in the meantime, it's natural gas, right? So that doesn't mean anything if everybody's already long natural gas, because that means that that's already discounted in, but it's not discounted in now because people are actually short natural gas. So I think that's the theme to to be doing. I don't invest like in stocks very much. I have my retirement account and my trust account for my kids and everything with somebody who puts
yeah.
me into low cost mutual funds so that I can't screw it up um, over the long term because this is money for my kids and their
Sure.
kids, you know. And so I have no interest in trading that. So I actually pay somebody to do that for me so that I can't screw it up, right?
Yeah.
But I have made in the last few months some investments in this type of stuff, energy, um, natural gas stuff, and even I took some flyers on some of these sort of nuclear type of flyer stocks, which, you know, if you buy five of them and one of them works, you'll make a ton of money. So
Yeah. And when you say invest, your time horizon for these investments, how's it different from your trades?
I plan to never sell these things. They're either going to go to zero and take me out,
All
you
right.
know, or they're hopefully going to work.
What is your average holding period for something that you trade? Do you
For
have?
my trading stuff, about two,
Yeah.
3 months. Two, three
Okay.
months.
All right. Makes sense. Jason, where should we follow you?
Crowdedmarketreport.com is a great place to go. Even if you don't want to sign up for our service, that will point you to our Twitter. That will point you to our YouTube, which I do free stuff on YouTube all the time. It will point you to our Substack, which is also free. Our Substack guys get stuff for free like once or twice a week. I would go there and that'll point you to all the different places that you could find our insanity.
Hey, I appreciate you coming on the show today, Jason, and I appreciate you coming on the show all year round. Great calls this year. People can check out our last interview, link down below, see what Jason said last time. But yeah, appreciate you being on. Happy New Year, Merry Christmas, and Happy Holidays. Thanks for being here.
Same to you, David. Thank you.
Thank you for watching. Don't forget to like and subscribe, and we'll see you, Jason, again in 2025.